traders, and welcome to a new day trading strategy video of mine. In today's video, we're going to be talking about the on-balance volume indicator and what exactly that means for the market. So the reason I'm doing the OBV today is it was the most suggested video that I had on my Patreon. Trading books to read still came in last place, even though we were looking for some more love for trading books. One more thing, I did just add a new Patreon tier, if anyone is interested, which would give you the ability to post any chart, post any question, and I will answer it quite quickly. In a more formal sense, rather than the more informal answers that I typically give for that one. Okay, so let's go into OBV. OBV's calculation is probably the simplest calculation that I've ever come across for an indicator. All it does is it takes a period, so let's say it's the 5-minute. If the 5-minute period closes above the open, so green candlestick, then we're going to add the transaction volume that occurred during that candlestick. And if the candlestick actually closes below the open, or price is in a down period, it goes down, then we're going to subtract the transaction volume that occurs from the OBV indicator. So that's just going to give a running total volume. So like let's say here. You can see that OBV does go down from here to here, and that is because this closed below the open. All it did was it took that volume right there, and it subtracted it from this value here to go to here. That's all. You can see this continue to rise until we see this, and then that. Yeah, so OBV is quite simple to understand, and you could even calculate it by hand if you wanted to look at thousands of little candlestick patterns and do it that way. Typically, the actual value is pretty irrelevant. Actual value would be these. More importantly is the change in the values that you see, because these values are just going to change across any trading instrument that you look at. They're going to change a lot, but the actual rate of change of these values compared to price is what's more important. And finally, it's one of the more versatile indicators. I'm only going to be going over 3 ways that you can use this indicator, the 3 basic ways. But there are dozens of other methods you can use with this, or even dozens of ways you can combine it with other indicators and other kinds of strategies as well. So I'm surprised I actually have not talked about in any of my videos the 3-step method that I use personally, and I am probably going to make a video on this later, with bias, trigger, and execution. So we want to look for 3 types of indicators that give us 3 types of analysis of the market. So bias is going to give us either a bullish or a bearish bias, and what we're going to get from that is from that would come from sentiment, that would come from order flow, that could come from volume, that could come from OBV, from all those. And basically that just shows us what other traders are doing in the market so that we can position ourselves relative to other traders. After you get that bias, typically that's where you want to look for more trigger indicators. Trigger indicators can include oscillators such as MFI, RSI, indicators that are going to go from oversold to overbought. And so if you see, like let's say OBV is showing you a bullish bias, and then you see that you use RSI, and RSI goes oversold as you have a bullish bias. So your bias, bullish, so check. Trigger, check, because RSI is oversold. You don't actually want to buy immediately. That's where execution comes in. Execution can be done from using Fibonacci's, or it can even be done by placing orders at exact previous resistance levels. If price makes supported at a previous resistance level. So that's going to give you the actual level to place your limit buy order at, or limit sell order. The volume profile can be used for executing as well. So this is just going to give you that 3 kind of tiered analysis to approach the market. Like I had said, OBV is going to give you a bias. And one really important note on this that I want to make, we don't want to just trade off of the OBV. We don't want to just trade off of bias, because that's probably not the best idea. If you just trade off of bias, you're probably going to be buying in a bullish spot, but you could even be buying in a pretty bad bullish spot like a market top, because the market top is typically where price is going to be most bullish if you look at past patterns. You don't want to just trade off executions as well. You don't want to just trade because a Fibonacci level is hit, because that's not really giving you enough information. That's why we want to use all 3 of these together to create that concrete strategy. And this complements well with trigger indicators such as MFI and RSI if you want to add those on. It also works well with the average true range, which looks at volatility. Okay, so let's go over the 3 different ways that you can use this indicator. So the first method is for an uptrend. You want to draw price high to price high. Then you want to find divergence if OBV fails to make a new high. And then downtrend, you're just going to do the opposite. So this is what I mean by that. We have an uptrend. We have price making a new high. OBV does not make a new high. It stays flat. Price makes another high. OBV actually goes much lower because we're seeing a lot more negative volume enter the market. This is not a great sign to buy. This is actually a pretty good sign to look for selling. From a trigger indicator such as RSI, or even an execution indicator such as like Fibonacci's, you could find a place to sell or short around this area. Price does go down very quickly, as you can see here, and OBV does confirm that as well. And you'd have found all of this if you just looked at the patterns of high to high. What does OBV do exactly when price approaches that high? So next one here, let's go for a downtrend. Price is in a pretty strong downtrend. Then we get some bullish bounce back and some bullish bounce back here. It does make a new low. So let's look at what's going on there. Price makes a new low. OBV makes a higher low. This is a pretty good sign that there's going to be either a bullish retracement or a bullish reversal. And this is what happens. It turns into a bullish retracement as price goes from about 10.75 all the way up to about 11.2. So this would have been a really nice trade to try to enter into this consolidation area here, stop loss below there, and then maybe take profit, somewhere at resistance. That all seems pretty reasonable, just because of this divergence that occurred. The other method that you can use with divergence is not just looking from high to high or low to low, but to look at the overall trend. So what I mean by that is if price is in an uptrend, you're going to want to look for the overall OBV divergence to see if it's either flat or falling. And then in a downtrend, you would do the opposite. One more thing, and I know this doesn't probably make complete sense because I'm not showing any visuals yet, but notice the slope of OBV change as price slopes, and that's going to make a lot more sense when you actually look at a chart visually. So let's just isolate this portion of the uptrend, not looking for highs and lows, but just the uptrend. OBV is steadily decreasing as price is steadily increasing. This is what you might even see at a market top sometimes, and price does go down. One more interesting note that I do want to say on this, price goes down quite violently, but we do see a lot of bullish, we see the bulls fighting back. So what does this mean? And we also see the OBV is moving in a downward channel. If you drew a trend line there, if you drew a trend line there, it's not really falling too quickly. This was actually retracement. Minor market top, price goes down, retraces, and it actually continued moving higher. Reason being was that the sellers were not that energetic. How could you find that? Looking at the on-balance volume. On-balance volume is not getting crazy, as you can see here. Price makes a significantly lower low here, right there. OBV barely even falters, as you can see. And that would be a sign that this is probably not the strongest downtrend. You could even use that analysis. This would give you a bullish bias because remember, bias trigger execution. Then you could go to a trigger indicator like an RSI. If RSI tells you that this is oversold, then you could go to execution like Fibonacci's and then try to put your order at like 38.2 or 50 or 61.8%. And then you would be in the trade and hopefully catch some more of the bull run. Let's look at one last divergence. Price is moving again quite rapidly in this initial stage of the downtrend. But then we can see that it gets a bit weaker with some bullish volume entering the market. This doesn't really look like a very strong bearish OBV. As you can see, price really goes low here and then makes a significant lower low here. OBV doesn't really move that much, and throughout the entire trend, OBV is not really changing much, as you can see. So this isn't exactly bullish divergence because that would be if OBV was going up while price was going down. This is just showing a weak bearish trend, and that's what occurred. We had a significant retracement that went back up to previous resistance, as you can see there. So I also want to talk about OBV confirmation. This is just the opposite of divergence. So in an uptrend, what you want to see with OBV is a very strong, steady increase in on-balance volume, and in a downtrend, you just want to see the opposite. So not exactly steady here, but price breaks above consolidation, right here, boom, 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 and we see a great increase in OBV. This is confirming the new uptrend right here. You want to see a lot of bull volume. You want to see a lot of buying volume going into the market when the market actually does go above resistance. Because if you don't see a lot of buy volume, and if you see a slight jump in OBV like to here, that could be a sign the price is just going to continue to consolidate. But this kind of strong move after consolidation is going to give you an opportunity to buy in the resulting consolidation, as you can see here, and position yourself for the uptrend. Price moves much higher, as you can see. And the OBV here didn't really change at all. If the OBV did actually start to slope down as price is moving sideways, that could be a sign that you don't want to buy, because that could show you that a lot of bearish volume is entering the consolidation, which could even be distribution, if you're aware of accumulation versus distribution. Yep, so here's just another example of a confirmation. I'm drawing from a high to a significant high after the beginning of that uptrend. I'd say the beginning of the uptrend was here, high to high. OBV goes from about, the actual values don't matter, but it's the change of values that matter, like I had said. OBV goes from about, I'd say, 1100 all the way up to about 2100, so about doubles from this high to this high. That's a lot of bullish volume coming into the market at an early stage, which is pretty healthy for the market. One thing I do want to say, if you might be confused about, don't we want to sell when everyone's buying, and don't we want to, contrarian? We want to be on the side of the smart money and not on the side of the dumb money. Volume does not filter out dumb money. Volume does not filter out smart money. That's why we use order flow and sentiment, because that does actually filter them. But when you're just looking at raw volume, and when you're just looking at OBV, this is all of the market participants. So we want to actually be on the side of OBV here, because that's going to put us on the side of the smart money. Price goes much higher, as you can see. I just wanted to add that little note on trading using the OBV. Another way, and this is probably my favorite way to use OBV, and how I used to use in the past, is to draw trend lines on OBV, horizontal trend lines. So what I mean by this is, if you can see within the OBV chart here, if you can see repeated support being touched, support here, resistance here. I'm not looking at price here. I'm just looking at the OBV. And you can actually draw resistance and you can draw support on the OBV. And this is how you do it here if you want to pause the video. There are two ways that you can trade this. One, if you see OBV respecting a previous resistance or support area, well, then price is probably going to head in the other direction, naturally. But, and this is probably the main way that I use it to gauge breakouts, if you see OBV just burst through a previous resistance, like let's say, yeah, like right here, perfect. OBV has resistance here, 1 touch, 2 touch, 3 touch, 4 touch, right there. OBV bursts right through that right here. This is a really good spot to buy. And this is going to give you a strong bullish bias once that's broken, and that would have bought you in there for a pretty nice uptrend. All right, let's look at some examples. So we have 1 touch. You can't really see it here, but we had another touch of OBV down there. 2, 3. So we have a strong OBV resistance area. Let me get a strong spike upward with OBV breaking that resistance. We also see a volume spike and price moves above price resistance. This is a very good spot to buy into the market. This is showing us that smart money is entering the market and that we might be getting a new market stage of an uptrend, of course. And we do. Price goes significantly higher. We begin at about 9K, I would say, 9 to 9.2. And we ended about 11.7K. So that would have been a really nice trade if you had actually held recently up to that resistance. And that would have just been confirmed by OBV crossing above that powerful resistance line before. We can also look at it in the opposite manner with support. So notice here, we have support here, support here, support here. It's kind of all over the place. That's why we want to look at OBV. It's going to show us a much clearer picture of that bearish volume, as you can see here. We've this area, this area here and this area here. I drew a horizontal trend line of a little bit below, more of a best fit kind of line. And I saw that OBV was broken quite confidently here, and then also actually price's support was broken right here as well. This is a sign where you could think about selling or even shorting. And if you had, price goes much lower before bullish retracement, continuation of downtrend. As you can see here, OBV just collapses. And when it does, you can see that as price moves up, OBV does not move up. The bearish volume is still present even in this consolidation stage, right there, as you can see. And then OBV actually breaks below that support level here with this move here, as price breaks support as well and goes lower. So that's another way that you can use OBV, looking at, you can just drawing support and drawing resistance just to give you the basis of a bias when you use it on a real chart. I can't just talk about an indicator without talking about its drawbacks and how to mitigate those drawbacks. So it has three main drawbacks from being very simple. Volume spikes can really throw it off. When OBV sees a significant volume spike, that's gonna significantly change the values. And I can show some examples of that here. Where was it? Yeah, I think it was here, exactly. So OBV had a massive spike here, but price does go down. This is just going to happen sometimes naturally. I mean, it's not fantastic. This does show a bullish bias, and price does eventually go a bit higher, but it's volume spikes like these that kind of screw over the market. However, volume spikes at support actually do really help show you that support area, as you can see. Here was another example. We have an OBV spike, but price actually went down at 11.7. So you just got to be a good gauge of whether an OBV spike means that the market's at a extreme point where overbought, or if the market's actually just beginning an uptrend, such as a breakout. In determining those two, you can use other indicators as well. Potentially ADX you could use to find the strength of the trend. You could use standard volume spikes, like looking at stuff like this to try to trade against a volume spike, sell, and then buy when you see significant bearish volume, buy. But that's how you can really mitigate those issues of volume spikes. One more issue, and this is I think a little bit more major, because OBV is so simple, dojis can really cause a problem. For those who don't know what a doji candle is, it's an indecision candle that doesn't really move much. So there are many different types of dojis, but I see a lot of them here. It's like these kinds of candles here and here. OBV is just going to be all over the place because OBV does not factor in how much price change occurs. It only factors in whether price was moving up or down within that time period. So here price doesn't really go anywhere at all. OBV naturally should just be responding to volume and be flat. That's not the case. You can see that if this was just like 1/100th% lower, then OBV would not have gone up. It would have actually gone down by that volume amount. Because of that, you might want to use it on a higher time frame, which could filter out some of these issues where just not many people were trading, like right here, very low volatility. And that kind of caused the OBV to do certain things. If you do trade on a shorter time frame, then just be aware of how OBV's calculation can kind of tell you some kind of strange things at times. Just because I'm saying the limitations does not mean that I wouldn't use this indicator. It's just important to say these because if you know what they are, then you can know how to, like I said, you can know how to mitigate them. Finally, it's not always going to forecast future price movement, and especially it's not always going to show you where the market top or market bottom is, because that would be more for execution or even trigger-based indicators, not exactly indicators that are bias indicators like OBV or volume. It doesn't show you the exact level for a market top or the exact level for a market bottom. The purpose of this indicator is a really good complement to your RSI, to your MFI, to Fibonacci's, to volume profile. Like those kinds of indicators are going to mesh really well with this one. But by itself, I can't see why anyone would want to trade this by themselves. Also, well, you don't want to just trade RSI by itself. You don't want to just trade MFI by itself, and so on. All right, so that's going to be it for this video. We've talked about divergence, which is basically just looking for when price makes a move, if OBV makes the opposite move, that typically means that the current trend is likely to reverse. We've talked about confirmation. So if you see a very strong up move, you want to look to see a very strong move in OBV, showing you that volume is flowing in that direction. And then finally, we talked about support and resistance trend lines when drawn on OBV can show you points of price beginning a new trend. So if price breaks above a resistance trend line drawn on the OBV, that can be a pretty good spot to buy. And then some limitations as well that you can just easily not get rid of, but erase some of the problems by just using other indicators. All right, so I also did. We just hit 1,000 Discord members, and I just wanted to add this in. So I'm loving all the people here. As you can see here, I think we're at like, yeah, I think we're at 1,001 or 1,002. As you can see, yeah, 1,002. So if you are interested in joining this trading community, right now it's free. Um, right now the community is free, and I'm expecting it to be free for the rest of eternity. But yeah, you can join, ask any questions you want, or just talk to other traders if you'd like, bounce off ideas, post some charts. Yeah. All right, so that's going to be it, and yeah, happy trading.